Hey everyone, and welcome to another episode of Brett's Brain. Today, we're going to talk about what you do when you get a term sheet. Hey, I'm Brett, former entrepreneur, current venture capitalist. Thanks so much for checking out the channel. Make sure you share, like, subscribe, and ask us questions. We'd be happy to help you in your entrepreneurial journeys. Okay, you've gone through all the hard work of getting around together and pitching and deck and all that stuff, and you get a term sheet from a venture capital fund. What are your next steps? Well, one is you have to understand that you are going to have to work a bit quickly. If you take forever on a term sheet, an investor might get cold feet or they might see it as a red flag. So you do have to be ready to move quickly and understand what are your next steps. So number one is if you have a term sheet, you're going to want to share it with your lawyer. Great startup lawyers are a really important resource during a fundraise because they can tell you what's market and what's not market. And so it's not their job to negotiate for you. And you have to be careful about how much advice you take from different people. But what a great startup lawyer is they see lots and lots of term sheets. And so they can tell you this term is market, this term's not market, this is kind of near market, et cetera, et cetera. So it gives you a quick understanding of where are the places that you might have some leverage or levers to pull on here or there. Number two is if you have existing investors or any existing experienced advisors around you, is set up some time to talk with that real experienced investor that also might see a lot of term sheets and understand what market is to get their opinions on what should you be thinking about from push and pull, what's market, what's in market, out of market, are there any gotchas in the term sheet that you need to be careful of? So you can really understand if you sign this, what are you signing up for? Make sure you go into any term sheet, just like any legal binding contract that you're going to sign, understanding what you're signing up for completely. You want to read it from start to finish yourself as a founder as well. And if you don't be nervous, if you don't understand a term, you don't understand something in there, ask questions. You can ask questions of the fund that gave it to you. You can ask questions of your investors. You can ask questions of your lawyers. And to make sure you really fully understand everything that's going into this term sheet that you're about to sign, so you're not surprised later on in the process or 3 years down the road once you sign docs. Another really important thing to consider as a founder is that once you sign a term sheet, you kind of lose your leverage because you're going to have a no shop clause once you sign it, which means you can't continue to fundraise. And so you're not going to be able to negotiate post signing the term sheet. So any type of negotiating you want to do with the fund prior to signing the sheet. You want to make sure that everything is laid out and you want it to be detailed and specific because when you get to docs, again, you're going to be in a no shop clause. If you're negotiating a key point once you're already docs, you have a lot less leverage. Sure, you could walk away from the deal, but then you're starting your fundraise process all over again because your prior leads, prior conversations you've had have gone cold, and it's really not a good position to be in as a founder. So make sure you really negotiate all the key important things up front prior to signing the term sheet. And then finally, once you have all this information, you've collected all this feedback, this input from all of your trusted advisors and your lawyer around you, what you want to do is you want to understand what are the things that are most important to you. What are the things you'd walk away from this deal because of? And what are the things that are maybe a little bit less important? And don't be afraid to negotiate a little bit. It's okay to make asks. Now, if you make an ask that's crazy out of the world, that's way out of the blue and so far away from the terms offered, then the fund's probably going to walk away or say no. And it's also not going to leave a very good impression. But it's not a bad idea to push back on things that are really important to you. Very often you do negotiate a bit on price, on equity pool, on a variety of control terms, a variety of things. There is back and forth. It doesn't mean that a fund is going to say yes, but it also doesn't necessarily hurt to make the ask. If it's a reasonable ask, even if we decline and say, hey, no, we're not comfortable moving the valuation on this deal, we might say that, and that does happen. We don't think less of you for having asked. In fact, we kind of sometimes like that founders negotiate with us a little bit. That's okay. It's okay to negotiate and make those asks a little bit. So understand what your key things are and make a couple of those asks. Don't be afraid to do it. And you'll end up having a little bit of that back and forth. So those are a couple things to think about as far as next steps once you receive a term sheet. Thanks so much for watching. Make sure you share, like, subscribe, and ask us any questions if we can help you in your journey.